This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, hello and welcome back to the Research Talks podcast here from Stockbox with Alan Green. And how are you doing, Alan, at the end of this week?
Well, looking forward to the bank holiday weekend, Mark.
Indeed, it is a bank holiday,
yeah.
yes.
And actually, it's lovely and sunny here today, and the prospects aren't too bad for the weekend. So if we get 3 days of sun, that'll be fantastic. It'll feel like a holiday.
Indeed it will. Well, today we're going to be talking about Zenova. Of course, the fire extinguishers, the fire protection paint, the insulation paint, who've been making some moves recently with contract wins and various accolades they've been given. And then we'll do a couple of miners, Sovereign Metals, who had significant news this week on the commencement of the pilot plant. Build of that, and that's actually quite a quick process from talking to Sapan, so that's nice. It'll keep us all entertained throughout the summer. And Metals One, who of course are doing their JORC resource estimate for the other target, that's the P5 target, and they're looking to add to the already existing resource. So let's talk about these companies then. So we're starting with Zenova, aren't we, Alan? So let's go through Zenova first of all.
Yeah, so Zenova Group, Epicode ZED, shares are traded as high as 6.8p on the year, as low as 1.4p, currently at 2p. Now, from a charting standpoint, we've seen two higher lows. In April, we saw 1.5p low, and then so far this month, we've seen a 1.7p low. So each time that the share price has built back up again, so it could well be that we're reaching a turning point. And certainly given the news flow that I'm just going to go through, it could well be that's a turning point that the companies have been looking for. So Zenova was founded in 2020 by Tony Cawley, who I believe is still an advisor to the board, it's the company has a collective, if you like, of fire resistant products. They have Zenova FP, which is the fire resistant paint. Zenova FX, which is probably the most widely used and widely known product from them in the marketplace. Zenova IP, which is thermal insulation paint. Zenova IR, insulation render. So when a house is being built, the insulation has the fire resistant properties built in. And then WB, which is wildfire barrier. And these products are sold to a vast range of industries: oil and gas, aviation, marine, construction, automotive, and of course to governments. It's undergone, shall we say, a relatively slow process of development, because as with any company like this, you're in the market, you're knocking on doors and winning contracts, and that process takes time. There's a long lead time. And in between time, you have to get out there, you have to demonstrate the product and demonstrate the product's superiority, if you like, versus the competitive products in the marketplace. But certainly, looking at the process to date, Zenova FX has started to really accelerate with once the product was launched onto Amazon, and then orders started coming in from all over the world. September last year, Dulux was appointed UK distributor for Zenova Fire Paint. And then in November, the FX fire extinguisher range were granted official certification and compliance status. And noting that the Zenova fire products or the FX products were being used in TV, film, and across industrial sites. January this year, we saw the products expand into Latin America, Romania, and also the first FX extinguishers were delivered to Germany. Then really sort of a series of events in March, which really put Zenova on the map. The company received approval, or Company FX products received approval as marine extinguishers, so extinguishers in the marine industry, and of course that's a hugely important elevation in status for the groups. I mentioned that the company demonstrating the products. There was a big event in Palma, Mallorca, and the FX products were demonstrated there and way exceeded their expectation in front of an audience, an industry audience. And then to follow on into April, the company sort of announced it had raised a further 677,000 at 2p as it expanded into India. At that point, the chairman, Don Nicholson, stepped down. Fiona Radford took over, and Zenova then received the very prestigious UK Kite Mark. So it's gone through this process of evolution, approval testing, all those boxes have been ticked. And on the back of that, we heard early April the company had won a 2.4 million order for fire protection, if it's fire protection coating systems, and this is with a paint spraying company that were contracting to a large major UK company. So that's a chunky order. And then I think the real landmark one that's probably resulting in the turnaround for the company, and I think will probably cornerstone everything the company does from here on in. The company was appointed as the official supplier to the NHS, and on the back of that, secured its first orders to Epsom and St Helier Trust Hospital Group, of course, in Surrey. And the company said at that point, that development marked a real breakthrough for Zenova. It was a major contract win, and obviously we've spoken about companies winning contracts with bodies like the NHS and government beforehand. We spoke about, of course, acuity risk management. Once you're in with government or once you're in with organisations like the NHS, it takes a long time to get there. But once you're in, all these other departments open up, and everything sort of develops from there. So it really is a landmark moment for Zenova, and I think from here on in, investors buying in at this level, I think we could start to see that share price recovery. Certainly, we're a long way from the IPO price, but that's not really important at the moment, because I think the company's had to, if you like, earn its stripes out there in the marketplace. It's certainly done that. It's got a distribution network now, which is pretty well global, and certainly on the back of these recent wins and the developments in April, I think the company looks very good value at these levels, given the fact it's got a market cap of just 2.6 million.
Yes, indeed. Not a lot of money, is it? Not worth so much when you consider how they're building here. And I hope we can start to see, I'm sure we'll start to see quarterlies and start to put some numbers on these various orders. I know it's always difficult to, you interview people as well, to talk about that on an interview. It has to be sort of RNS first, but it's got to be fairly soon we can see some of those numbers, considering as well some of those orders that they've seen. And as you say, with the NHS there, what a great organisation to get a foot in the door with and build hopefully from within. And interestingly enough as well, of course that was for the lithium ion fires, wasn't it, in the hospital?
Yes, indeed,
and
yeah,
they're not actually right. Certified for that purely because there's no test for it. But the NHS will have done their own tests, as was said in the RNS there. So until such test is available, then that would be the final kind of accolade, wouldn't it, for them to get? I think they've got everything else they could actually possibly wish for in the extinguisher world, anyway.
Absolutely, but I think you've got to look at I think the biggest standout for me certainly was the fact that the company's got a market capitalization of 2.6 million, and on the 29th of April, the company announced an order for 2.4 million, and that's payable over 2 years. But it's got one contract there that's almost worth the entire market cap at the moment. So when you look at it in that context, I think Zenova all of a sudden is looking very good value as an investment proposition. And it's gone through those hoops. It's got the client mark now. It's got official certification and compliance. It's got all of these ticks in the box for its product range. And you and I were talking before we came on air, Mark, about the videos on the website. There's some very good videos on the website that demonstrate the efficacy of the fire resistant paint, for example. And I think there is something exceptionally good here, and the fact they are winning these accolades and awards and certification, it's not by accident. It's because the products are actually very good. So yeah, you look at that market cap in comparison to that contract when things should start to fall into place.
Excellent. Well, let's talk about miners then. So Sovereign Metals, what a good bit of news they had this week.
Sovereign Metals, I mean, this is I put out a tweet the other day. This was talked about as one of the major opportunities for investment. You and I have talked on many occasions, Mark, about the new commodity super cycle and where miners are going to be. We're seeing copper stampeding through the roof. We're seeing prices of other commodities stampeding through the roof, and yet the miners still are relatively undervalued. And when you look at a mining company, what you want to see is a world-class asset that's already developed and taken steps down the road. You want to see good management. You also want to see major shareholders, offtake agreements in place already. And Sovereign ticks all of these boxes in abundance. And of course, most significantly last year, if we look at the Sovereign share price over the year, we saw last summer Rio Tinto came in and invested $40 million, taking 15% of the company. And the share price, popped up to 29p then, but since then it's sort of come back. I mean, we saw lows of 21p on the year, but actually it's been relatively stable as a company holding these assets. But what you have to consider is the sheer scale of what the company has. So, of course, we've got the Kasia rutile and graphite project in Malawi. And this is such an enormous project. It dwarfs anything else really comparable. You have Sierra Rutile and Sierra Leone, which I think has got a net present value, or it has a net present value of about $800 million. Kasia at the moment is about 1.6 billion, and I think that's going to grow again, because every time the company produce a mineral resource estimate on the asset they have, they then start exploring to the north and to the south, and they find further resource. And of course, they're discovering they've discovered rutile. They have offtake agreements with companies like Chemours, the French chemical giants, Mitsui, the Japanese giant, Haskor, who are the largest supplier of welding materials in the world. And of course, in the process, they've completely transformed the town of Lilongwe and the surrounding area. They also have a scheme there to develop sustainable farming. They're working with the local farmers to improve the maize crop yield. The company is improving education, health, and the asset was discussed by the Malawi president at his address to the UN back in 2022. He mentioned Kasia as an asset that was going to really change the fortunes of the nation. So this isn't a district scale project. This is a national scale project, and I think it's important to understand that. Of course, when you're developing an asset like this, you've got your data, you've got all of the information at your fingertips. We know there's 1.8 billion tons of rutile in the ground there at the moment. That's before we get to the new areas. And we heard in February from the company that drilling into a new area outside of the mineral resource estimate zone, they've discovered a further 8 kilometers of mineralization to the south, which is open to strike and depth. And this is just the nature of the area. And there are pictures in the company's tweets and releases of mineralization literally sitting on the surface. And this isn't just, in patches. It covers, thousands of square kilometers. So, it's important to understand the context and the scale of the asset here. So we then come to the phases of developing the area, and of course developing the project. So the company has gone through the processes of sampling both the graphite and the rutile, and it's been tested extensively and to really assess and understand the quality. They appointed Dr. Surinder Garg in April to. He's a graphite expert. He's been appointed to independently qualify and quantify the graphite product, and they discovered through testing across 4 independent laboratories in May that the graphite circuit feed at Lilongwe is averaging over 97% total graphite content, and that's across 4 different labs. So that they also discovered as well that without having to crush and mill the product, they can upgrade the cassia production or from 1.4% graphite content to 55% rough concentrate without milling or crushing. So again, this is all about cost saving. It's all about keeping the product as green and in line with ESG policies as possible. And they've taken this huge step forward to ensure that. They then announced that they'd taken the spherical graphite to Germany to a graphite company there. And what that testing showed was that cassia spherical graphite has world-leading specifications that could even potentially disrupt the China-dominated supply at the moment. So this is hugely important for the company. But most significantly, of course, we heard this week from the company that it had moved cassia to pilot phase, and of course, pilot phase means that they're actually developing the ground. They're going to be digging a test pit. They're going to be taking out some 150,000 cubic meters of ore over a 3-month period. The excavated material is going to be tested on site and also at Sovereign's laboratory in Malawi, and it'll also provide additional samples for graphite product qualification. And there's a picture actually in the release that just shows this natural concentration of heavy materials at surface, which is quite incredible. Frank Eager, who's the managing director there, said it's a hugely important milestone for cassia. The testing process will cover the full spectrum of engineering, design, logistics, materials handling, water and environmental approvals, and also land rehabilitation after the work is done.
It's the full suite, isn't it?
It's the full suite, yeah. I mean, they're progressing cassia to the totally new phase of development. They've proven the quality of the product. And now, of course, you're moving to feasibility stage and developing the asset to the next phase. But the company was picked out separately by another investment group over in Australia as they compared. There's a very one of the wealthiest men from mining in the world, Andrew Forrest, of course, founded Fortescue Metals years ago, and Fortescue literally the share price grew by some 70,000% over a 15-year period. Made Andrew Forrest's billions. And they're comparing Cassia and Sovereign Metals as a similar asset. And of course, we're currently looking at Sovereign. We have a market capitalization currently of 157 million pounds sterling. And in comparison, really, to companies that are owning assets elsewhere in the world, I mean, most of the mining companies are multi-billion-pound companies. So I think Sovereign and Cassia have an awful long way to go, and I think we're just now seeing we're seeing, if we look at the share price chart in particular, since we heard the news about the graphite testing. So this is in mid-April. The company also, important to note, that it ended Q3, that's up to March 31st, with 36 million Australian dollars cash in the bank. So the company's got plenty of cash to continue to execute on the plan. And the share price has just jumped up since that point, and it's gone back, getting back close to those year highs now. But given the progress, given the boxes that have been ticked in advancing Cassia, I think we're going to see Sovereign move up to a new level of valuation probably in the coming months, because they've achieved so much, and they look set to achieve so much more within a relatively short space of time.
Indeed, and I mean, as I said at the start, the summer is going to be extremely interesting, isn't it? And certainly it'll be keeping investors entertained throughout the summer as they go through the build of that pilot plant and all those test pits they're doing as well, and full rehabilitation. I thought that was fantastic. I've not actually seen a company, I'm sure it's done quite often, but I've not actually seen that been done before, where they've got multiple different test pits for rehabilitation of different ways to rehabilitate a pit to make the soil better than, or the ground better than when they actually started, so that it can be more fertile to be returned for the landowners. So there's going to be a lot to keep an eye on as they go through that build process, and I believe as well taking people out, major stakeholders out. So who knows, maybe I'll head out as well and see it on the ground for myself. But nice graphic that was in the RNS as well when I talked about that with Sapan. It really shows exactly what they're going to do. So for sure, Sovereign will be keeping us as I say, entertained throughout the summer, and it could be a very different company as we go into the autumn and everyone gets back to work again.
Yeah, there is a good graphic in that, Mark. I agree. That was it's worth rereading the most recent announcement. As I say, you'll see the picture of the concentration of heavy minerals at surface, but also the actual the graphic that shows how the pilot site will be working. So yeah, it's a really exciting, but also just think of the scale of this thing. It's huge. It's such a huge area. So of course they have to start somewhere, but this entire area is going to be developed. But as you say, the rehabilitation makes the soil more fertile than before, and they're investing into this sustainable farming program for the farmers to improve the maize crop yield. So the standard of living has risen hugely. So they've really ticked all the boxes in regard to into their corporate and social responsibilities.
Indeed. Well, let's finish off with Metals One then, Alan. What can we talk about with Metals One?
Well, Metals One, again, it's been a strong year for the company. I mean, perhaps we can look at Metals One, and it's not necessarily so much been reflected in the share price, but as is often the way, it takes time for the quality of the asset to resonate with investors, and of course that's part of our job to remind investors of what the opportunity is here. So the flagship asset for Metals One, of course, is their black schist project, and black schist it's a term that describes a nickel, zinc, copper, cobalt ore body that can be developed as a low-cost critical mineral resource, simply because it's very amenable to using or to have the bioheap leaching extraction process applied to it. In other words, it's easy to extract the nickels and it's cheap, and that's extremely important. Now, of course, Metals One came to market last year, IPO'd at 5p, when we're currently sitting now at just over a penny. that's unfortunately, in line with a lot of mining companies that are seeking to develop projects. So the company has the Black Shift project, initially 100% ownership, but the company has just announced that following a fundraising, it is going to buy back the Black Shift project from Gunsin. They've agreed a fee of 250,000 in cash or shares, and that can be paid out at various stages. So the company retains ownership of that going forward. There's an inferred mineral resource estimate. Of course, this is the company's focus has projects in Finland, which is the Black Shift project, and also in Norway, the Rana project, which is a brownfield project where it has an unoperating, an 80% non-operating interest. But as I say, the current mineral resource estimate of 28.1 million tons of Talvivaara style deposits equates to just under 54,000 tons of nickel, just under 28,000 tons of copper, 3,500 tons of cobalt, 180,000 tons of zinc, and this is across these assets. So the money was initially used to purchase equipment and data, and of course put the team on the ground. A number of developments throughout the year, but certainly in March this year, the company announced that it was going to expand the Black Shift asset portfolio. They were aiming to define a 200 million ton resource in the Paltamo area, the P5 area, and in doing that, show a clear path to economic extraction. And I think that's what mining companies have to show. If they can either take a route as explorers, they can take the route that a company like Fulcrum Metals has done, for example, by acquiring tailings projects so they can generate cash from that, or they've got to show a clear fast-track route to extraction, and that indeed is the route that Metals One have opted for. During April, we saw both members of the board, Chairman Alistair Clayton and Jonathan Owen, the chief executive, both waded in to buy shares. Alistair Clayton bought 500,000 shares at 1.065p. He currently holds just under 2 million. Jonathan Owen bought 2 blocks, 552,000 shares at 1.5p, 147,000 shares at 1.4p. So good to see support at that level. And then, of course, the company announced in May to raise 895,000 at a penny to further develop the Black Shift project. The company expects the improved mineral resource estimate that they're now working on to underpin a preliminary economic assessment, the PEA. And of course, the funds that they've raised have gone to terminate the Gunsin agreement I mentioned just now, but also to fund the drill program and resource updates to increase the mineral resource estimate from the present 28.1 million tons. The company has also announced it has received assays from Paltamo, but it's going to complete a chemical assay on all of the mineralized intersections, and that's across over 5,500 meters drilled. And with the chemical assays, they're going to generate new and more accurate data to really underpin an upgraded mineral resource estimate. That's going to lead to the preliminary economic estimate, or PA, being commissioned later on this year. And of course, once we get to that point, then we'll start to hit values ascribed to Black Shift. And of course, that's going to reflect in the company share price, because the company now owns 100% of the Black Shift project. So good progress from Jonathan Owen and the team, but more to come.
Yeah, a lot more to come, isn't it? And what they've already got is pretty good, in my opinion.
Oh, it is.
Yeah. And they want to really, their overall target is 200 million. Now, that won't be happening this summer, but they might double what they've got from, is it circa 28 million, I think. They might get that up to, circa 50, 60. But their targets are pretty big. And from what I've been talking to Jonathan about the deposit, and you mentioned the Tel Devara style mineralization, it is these deposits are massive. The grade is not huge, but you have scale instead, and very profitable. So new to market, still I think to be perhaps understood by the market, but they're not super early stage, are they? They've already got a fairly decent resource, and moving into the economic studies is a fairly advanced stage to be at. So I do like Met1, and up in Finland there, of course, a nice good jurisdiction to work in. So I think Metals One's a good one to watch for the rest of this year, really, and see where they get with this extra resource estimate. And as they go into the economic studies, and then in the winter they'll be out drilling again.
Indeed. Well, I think if you look at where it's gone since IPO, we're now at 1p versus an IPO of 5p, and the company has made huge progress. It's raised additional cash, and of course, it's now. I think it is an investment proposition. If you look at the company, say, okay, so that's the Blackshift project. It owns that project. It's upgraded the previous mineral resource estimate from 28.1 million to, if they double that to say, 50, 55 million, or 60 million even, that's great. But also the process that the route they've taken to do that is through chemical assay, which is much more accurate. So you can really see value in that process. And if they then take it, because they've said that they're increasing the scale of their work at the Blackshift project, if they then scale that up, as you say, to 200 million tons, that then commissions the PEA, the preliminary economic assessment, and then investors can look at Met1 and say, okay, so there's a 200 million ton asset there. They've gone through all the hoops. The PEA's there. That's going to be worth X, versus the company valuation currently sitting at just less than 2 million. Very low indeed. So considering the hoops the company's had to go through, it is fairly late stage, as you pointed out, Mark. And I think we're going to see Met1 really start to accelerate this process. Now they've got that agreement with Gunson that they own the project outright.
Indeed, and that's a big point as well, isn't it? They want to take the whole ownership of that project, because they see the opportunity there. And
if you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com.
And let's speak again next week.
Thank you for watching.
Indeed. Thanks a lot, Mark.